Hello and welcome to today's Fat Tail Daily video. Again, James Woodburn, publisher here, and I'm joined today by Callum Newman. Welcome, Callum.
Thank you very much for having me.
Oh, good. I appreciate you spending the time. What time is it over there? By the way, just for context, everybody, Callum's in Spain right now, and he's about, one bottle deep into a nice Rioja?
Well, well digested by now. It's 1 o'clock in the morning here, actually.
Wow.
So just before the Aussie market opened, but they've got a different sort of setup with their daily hour. So it's not that crazy late here in the context of things. It's dinner's about 10, and then people stay up to about midnight. So it's not
Yeah,
totally
well,
crazy to be honest.
I'll be wrapped up in my slippers by now. But let's talk about your issue today. You sent it through overnight. It's really interesting. You actually, I hope you're okay, by the way, first of all. I had no idea about these MRI scans.
Oh no, that was a while ago. Yeah, no, I got the all clear. That was good.
Right, but you do draw an interesting parallel between health checkups and companies releasing their full year results. So I was going to say, maybe the first question is, how do you recommend investors prepare themselves, mentally and strategically, for moments of truth in the market?
Well, I mean, the best way to do it is to make sure you know what you own and why you own it, basically. That means you have to do your homework, so you've got a reasonable idea of what's coming up. So the danger you run in the market is if you chase momentum, or you're chasing a thematic perhaps rather than a specific company. And what can happen is, what I'm talking about is when the companies release their full year or half year announcements, the market will make a judgment on the day whether those are good or bad, or if they've met expectations. Now the problem is, and why I've referred to the health scare, is that if for some reason the company disappoints, you can really get hammered on the day. So that's the risk that you run when you go into the earnings announcements. So you have to be very aware of what the market expects from that company, and do your due diligence to make sure that they're primed to hit their target. So it's a really interesting part of the year. Very, very important.
And you mentioned Judo Capital Holdings, pretty decent 20% rally after their full year results. Obviously, while it can work in the negative way, it can also work in the positive way. What was the reason for highlighting that particular company, and what factors do you believe contributed to this barnstorming move, especially given the general negative sentiment around the economy and the banking sector right now?
Yeah, so the reason I highlight it is, obviously banks are really important to the economy in general. So they're on the coalface. They're lending to companies or people. If they have, if we get the economy in distress, they're going to get a lot of bad debts, that type of thing. So they're really a key important indicator. Now, I cover the small cap sector, so anyone watching this will probably be aware that the big four banks have rallied really strongly in the last 6 months, and they've blown everybody's expectations away, especially Commonwealth Bank, including mine. So those banks have done really, really well. The financial sector in the small cap sector hasn't moved up in the same way. So Judo is an interesting one because it's not a real tiny small cap, but it's still a lot smaller than the big four. So to put this in context, it came to the market in 2021 when things were relatively buoyant. Came with all stocks usually IPO onto the market with a decent premium, that type of thing. They had a horrible 2 years because the share price just got absolutely slaughtered. And that was all part of the small cap bear market. And of course, everybody was worried about recession and rate rises and bad debts and company liquidation. So that just terrified anybody holding that stock. Now, I came along earlier in the year and took a look at it and said, well, look, this share has been completely smashed up. And this is all part of the small cap dynamic that was going on around about that time. And I've been writing about for a long time. And you go, well, actually, there's a really interesting opportunity here where if things aren't as bad as everybody fears, then this share should recover, because the opportunity of that particular bank and what they specialise in isn't going to go away anytime soon. And oddly enough, the big four banks are coming. So Judo Bank is a business bank, so it lends to businesses, not real estate, that type of thing. The big four are coming back towards this sector, which they left behind, and so that's where Judo found its little niche. So the importance of the update was them coming out and going, actually, we're doing really well. We're expanding. We're making loans. Companies are looking to borrow. We're going to put on more bankers and of course the market has gone, well, this is great. They're exceeding their guidance. Things are looking bullish. Things are on the up. We've been too bearish previously, so that's why we saw the big rally. So as you said, with announcements, not only can they result in a big down move, but you can get a really powerful move up when the market likes what it sees, and that's what we got in Judo Bank. So specifically for Judo, that's really encouraging. And as a broader insight into the economy, as you say, a lot of people are bearish, and it's easy to get swept up in negative headlines. Well, you have a business bank here showing growth and momentum and expanding. Well, that's a pretty positive sign to me.
Can you maybe just touch on that, like maybe just elaborate on your strategy for identifying those opportunities and how you balance the risk of like low expectations? Because you say that there's actually exciting things happening, but I guess it's people's expectations are kind of low. But how do you balance that with the potential upside?
Well, I mean, this is all part of what I've tried to hammer into anyone that'll listen since last year, is that because the preceding 2 years was so difficult for the small cap sector, that it smashed out a lot of the risk. So as I alluded to with Judo, I can't remember the exact figures, but just say it came to the market on 15 times earnings as an example. Well, by the time it gets hammered down, that's been cut in half. So what the current period has allowed us to do with ASI, which is Australian Small Cap Investigator, is pick up a lot of these stocks that were previously smashed down. And as we've seen with Judo, but with some other ones, if the market senses that the company is recovering and there's positive things happening again, and all those issues are fading away now, like inflation and high rates now, we've got some certainty around that, well, then those shares start to lift back up. So the last 6 months for the service has been a real purple patch. I don't want to jinx it, but because things were so suppressed previously, all you really had to do was come in and scoop up some of the best prospects, and you can get a look at some really juicy gains. So Judo is one of the more modest performers that we've had. The screamer is from this similar type of dynamic is a company called Nuix, which had the worst possible start to life on the ASX. When it came to the market, it was down 90% at one point. But again, if you pick over the bones of these things and you go, well, this needs to change, all that bad stuff is priced in, basically. But what if this happens and this happens? Well, that particular stock is now nearly up 400% in a year. So that's the kind of crazy returns you can get if you get it right.
Yeah. I mean, obviously, yeah, we'll preface that with this inherent risk in the small cap sector. That's what makes it such a breeding ground and exciting place to look. So let's just final question. I remember you stood up in front of an audience, and Fat Tail Daily readers might know this, but it was back in November last year. We had a small little get together in Melbourne with a few readers, and it was probably in the depths of the bear market then and pessimism. And you stood up there and you said the small cap sector is really looking really bullish. I just very, very quickly to end Cal, are you still very bullish, and what key indicators or market conditions are you watching that support that outlook for small caps?
Absolutely. I think the opportunity set will run for a couple of years yet. So you're right. I did that speech in November. At that stage, we didn't know it then, but that was pretty much the low of the Australian market. And again, the way I phrased it was, well, everything has been so smashed up and suppressed, and it's been so difficult that, I mean, you should never say this, but it was hard to see how it could get any worse. But I had the view and good guidance that the American economy would hold together and keep leading the world up, and the overall cyclical indicators of liquidity and activity would pick up, so that the market had become too negative at that point. Mm-hmm. And that therefore the opportunity was, like everybody in theory says you should do, was to buy up when things are suppressed, on the assumption that if you can look forward a little bit, that they will re-rate higher as people lose the fear factor. That's what happened with the big stocks. They moved first. The small cap sector is still lagging the bigger stocks, but we're now seeing a return to what I would call a conventional kind of market. We're understanding that the previous context was the small cap sector was really suppressed, tight, difficult, hard to find anything that could excite anybody because it was so trumped by everybody's fears around war, recession, high rates, and all this type of thing. So now we're seeing stocks like Judo Bank that have been smashed up and taken to the cleaners start to come out with results that are company driven and go, look, we're really doing well here. And then the market can look forward and go, well, they're recovering. Well, what's it going to look like next year or 24 months down the line? So that can continue in a myriad of different ways. And so, as I alluded to, we've had multiple opportunities in the small cap sector. So the guys this year, they could have doubled their money on Drone Shield. That went bananas. 2S is another little communications company that's growing in Singapore. That's done fantastically well over the last 12 months. The gold sector's starting to look really interesting. We had a ripping little position in a gold company called Spartan Resources. So we're going back to companies that can generate alpha, substantial alpha from growing revenues and margins and profits and all those things that investors want to see when they get comfortable that the market itself is not going to collapse on them, which was the fear over the last couple of years. So that growth dynamic, as investors get more comfortable chasing growth and alpha, what they call alpha again, I expect more money to come down into the small cap sector. So that opportunity set could run for 12, 24 months more.
Interesting. Thanks, Cal. We'll leave it there. If you want to read further, Cal's articles below this video. If you're watching on YouTube, please obviously subscribe and you'll get a notification on the next video. And if you're on our website, check out Cal's article. And if you haven't subscribed yet to the Fat Tail Daily, it's absolutely free. There's a sign up box somewhere on this page. I don't know where to point, but I will speak to you next week, Callum, I think. When are you back in Melbourne?
Only got a couple of weeks to go, so just the week of the grand final. I'll be back, so looking forward to being back amongst the Aussies again.
All right, going out. I won't keep you up any longer. Thank you, guys, and thank you for your time, Cal. Cheers.